Hello and welcome to CMS Forex News. I'm market analyst Nick Nassad. Today is Friday, February 20th, 2009. Europe's services and manufacturing sectors contracted at a record pace in February, preliminary data showed. The services PMI fell to 38.9 from 42.2, while the manufacturing PMI slid to 33.6 from 34.4. Both indexes were expected to increase slightly as there were hopes for stabilization in the downturn. Those hopes were dashed with this data and solidified expectations of a rate cut by the ECB in its next meeting in March. In the UK, retail sales rose 0.7% on the month in January, surprising forecasts on the upside. Expectations had been for a flat month. The gain was led by strong internet sales and aggressive discounting. On the year, sales rose 3.6%, following an upwardly revised 4.3% annual gain in December. The pound-dollar pair bounced off support near 1.4160 and rose nearly 300 pips to a new high for the week at 1.4480. The pound gained following its retail sales data, and the dollar was pressured in the late New York session, especially after European traders left for the day and liquidity got thinner at the end of the week. U.S. stocks were down sharply to start today's New York session and extended those losses in the afternoon. The Dow Jones Index fell below 7,300, setting a new 11-year low, as shares of Bank of America hit a record low and Citigroup stocks slumped to an 18-year low on fears the two financial giants may have to be nationalized. The increase in risk aversion boosted the yen, pushing the dollar-yen 170 pips lower to set an intraday low near 92.50, after the greenback rally of the last 6 sessions came across resistance at 94.40. In a look at another pair that moves in correlation with investor sentiment, the pound Swiss Franc plummeted 400 pips after it set an intraday high near 1.7030. The decline wiped out the gains from this week and brought the pair back near its open on Monday around the 1.66 level. It's interesting to note that the pound-yen pair did not see as significant a move in the yen's favor. The main London index, the FTSE 100, was off 3.2%, though unlike shares trading elsewhere in Europe, it managed to stay above 2008 lows. In a change from recent trends, the euro-dollar rose during today's burst of risk aversion. From a low near 1.2560 that was reached around the New York Open, the pair rose 300 pips to claim the level at which it had started the week. It put the pair back above the 1.2750 level, which had switched from support to resistance earlier in the week. In a fundamental release from the U.S., consumer inflation rose 0.3% in January, slightly higher than forecast of a 0.2% increase. The core rate was up 0.2%. On the year, prices were flat, which is the first time that annual inflation was zero in over half a century. Though the annual rate is down as a result of the recession and the sharp decline in energy prices since last summer, the monthly rate showed its first increase in 6 months. Canadian consumer prices continued falling in January, declining 0.3% on the month. Core prices fell more than expected, which means that the disinflation that started in energy prices is filtering into other goods and services prices in the economy. When price declines are centered around energy and commodities, it's generally a plus for an economy as it puts more disposable income in households, which can then spend on other goods. It's when price declines filter into other products that businesses, already hurting from the recession, choose to limit their spending and hiring, which becomes a negative for the economy. The US dollar-Canadian dollar pair followed the pattern of greenback weakness in the second half of the New York trading session. The pair rose to an intraday high of 1.2650 in the early New York session, but then plunged about 200 pips, hitting its low from Tuesday around 1.2420, and then it recovered to the 1.25 level in the mid-afternoon. Next week, we get a view of the most recent U.S. data on housing sales, including existing and new home sales, along with durable goods orders for January. At the end of the week, the U.S. will post its revised version of fourth quarter GDP. And that concludes our recap of the Forex market for today and this week. Thank you for joining us here at CMSFX.com, and we wish you a great weekend.